Good day Forex trader. Your USD Forex Signal, bearish flag signals more weakness. The pair will likely break out lower in the near term. Bearish view. Sell the Euro USD and set a take profit at 1.1500. Add a stop loss at 1.1620. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.1600 and a take profit at 1.1700. Add a stop loss at 1.1550. The Euro USD was little changed on Monday morning as investors reflected on the relatively mixed US non-farm payrolls data and the upcoming inflation numbers. The pair is trading at 1.1575, which is slightly above last week's low of 1.1530. U.S. employment and inflation data in focus. The Bureau of Labor Statistics, BLS, published mixed jobs numbers on Friday. The data revealed that the country added just 194,000 jobs in October after it added 366,000 jobs in the previous month. This data was significantly lower than the median estimate of 500,000. A previous reading by ADP had pegged the private payrolls at about 543,000. On the positive side, the country's unemployment rate declined to 4.8%, meaning that the country is experiencing full employment even as millions remain out of the labor force. Wages also rose by 4.6% while the participation rate remained unchanged at 61.4%. The next major catalyst for the pair will come on Wednesday when the U.S. will publish the latest Consumer Price Index, CPI, data. Economists polled by Reuters expect the data to show that the headline CPI remained unchanged at 5.3% in September while the core CPI rose by 4%. Therefore, these numbers could signal that the U.S. is moving to a period of stagflation, where high inflation coincides with a period of high unemployment rate. Stagflation is usually considered to be one of the worst economic conditions in an economy. The Euro-USD pair is also reacting to the relatively limited risks in the economy after Congress passed a bill to expand the debt ceiling for 3 months. Without the deal, the country would have defaulted on its obligations in the coming few weeks. The next important mover for the pair will be the earnings season, which starts this week. Euro-USD Forecast. The 4-hour chart shows that the Euro/USD pair has been in a tight range recently. The pair is trading at 1.1575, which is only a few pips above its lowest level last week. The pair has also formed a bearish flag pattern that is shown in green. In price action, a bearish flag pattern is usually a bearish signal. The pair's bearish trend is also being supported by the 25-day and 50-day moving averages. Therefore, the pair will likely break out lower in the near term. This will see it decline to the key support at 1.1500. Gbp Usd Forex Signal, weekly bullish. The Bank of England's signaling on rates are helping to hold up the British pound. Today's Gbp Usd signals. Risk 0.75%. Trades must be taken before 5 p.m. London time today only. Short trade ideas. Short entry following a bearish price action reversal on the H1 time frame immediately upon the next touch of 1.3687 or 1.3746. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. Long trade idea. Long entry following a bullish price action reversal on the H1 time frame immediately upon the next touch of 1.3574. Place the stop loss 1 pip below the local swing low. Move the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Gbp Usd Analysis. I wrote last Wednesday that the US dollar remained strong, but the British pound was holding up relatively well against it. I thought that bullish movements were likely to be more interesting than bearish movements, so I was looking to trade either a bullish bounce at $1.3577 or a strong breakout above $1.3650. This was not a useful call as the price closed down on the day and easily broke below $1.3577, but it was at least enough to stay out of trouble. The formerly strong USD lost some tailwind at the end of last week with a disappointing non-farm payrolls release in the USA, while the British pound has firmed up as members of the Bank of England in recent days are publicly hinting that the bank will need to raise interest rates soon to head off inflationary pressure. This has helped the price continue to rise gently here, in a wider market environment where risk is bid again. Technically, the price has been rising since last Wednesday with a sequence of higher lows and higher highs, with no obvious obstacle to further advances except the resistance level at $1.3687. The US is on holiday today, so trading may become very thin after the first half of today's London session. Therefore, the best approach will probably be to look for early short-term trades on dips on shorter time frames. Aud USD Forex Signal, extremely bullish above 0.7320. The pair will likely break out higher this week. Bullish view. Set a buy stop at 0.7320 and a take profit at 0.7400. Add a stop loss at 0.7250. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 0.7280 and a take profit at 0.7200. Add a stop loss at 0.7350. The AUD USD price was unchanged in early trading as the market focused on the recent American jobs numbers. The pair is trading at 0.7305, which was slightly below last week's high of 0.7340. US and Australia jobs data. The US published mixed jobs data on Friday. The data revealed that the country's labor market continued to face significant challenges in September. While job vacancies remain high, the economy managed to add just 194,000 jobs. This was the smallest monthly increase in months. On the positive side, the country's participation rate held steady at 61.25 while the unemployment rate declined to 4.8%. This was the lowest unemployment rate since the pandemic started. The next major economic data to watch from the US will be the country's inflation numbers scheduled for Wednesday this week. These numbers will provide more details about whether the country's economy is sinking into stagflation, a period where high inflation coincides with high unemployment rate. The data will also show the impact of the rising gasoline and gas prices. In the past few weeks, the price of crude oil has jumped to a 7-year high while gas has jumped to an all-time high. The Fed has long insisted that the current wave of inflation is transitory. Meanwhile, the Australian Statistics Agency will publish the country's employment data on Wednesday. Economists expect that the Australian economy declined by more than 120,000 people in September after it lost an additional 146,000 in August. Its unemployment rate is expected to rise from 4.5% to 4.8%. Still, the Australian economy will likely rebound in the coming months because of the trends in vaccination. The country is also expected to reopen its borders for foreign tourists in the coming weeks. Aud USD Forecast. The 4-hour chart shows that the AUD/USD pair has been in a tight range recently. It has found substantial resistance at the current range, which is important because it was the highest level in September. The 25-day and 50-day moving averages have also made a bullish crossover while the price is between the 50% and 38.2% Fibonacci retracement level. Therefore, the pair will likely break out higher this week. If this happens, the next key resistance level to watch will be at 0.7400, which is slightly above the 38.2% retracement level.